This is East Asia Tonight.
Good evening, I'm Telly Edwards. Tonight's top stories. Fresh friction between the US and China as the world's top two economies begin charging new port fees on each other's ships, with Beijing vowing to fight to the end in their ongoing trade war. But the countermeasures extending to third countries, with China imposing sanctions on a South Korean shipbuilder for allegedly cooperating with Washington's shipping industry probe. While the U.S. says it backs Manila after Chinese and Philippine ships clashed over the weekend in the South China Sea, reiterating to Beijing its defense pact with the Philippines still stands. And South Korea says 80 of its nationals are still unaccounted for in Cambodia. Out of the more than 300 were kidnapped or missing in the first 8 months of the year. Also ahead in the bulletin, LG Electronics Indian unit making a sensational trading debut, with shares soaring 50% after raising more than $1 billion in the country's third biggest IPO of the year. And some vineyards in Japan are looking to diversify their offerings as they struggle to deliver consistency in the face of changing weather conditions. China has sanctioned 5 U.S.-linked subsidiaries of South Korean shipbuilder Hanwha Ocean. The move is part of an ongoing counter-probe into an earlier American investigation. Beijing alleges that Hanwha Ocean's American subsidiaries assisted and supported the U.S. government's investigation and jeopardized China's sovereignty and security. China's Commerce Ministry says organizations and individuals in China are not allowed to engage with and cooperate with the sanctioned entities. South Korea, in response, says it will reach out to China and relevant ministries to minimize the impact of the sanctions. Well, the U.S. launched its Section 301 investigation last year, which reported that China used unfair policies and practices to dominate the maritime sector. Beijing, however, is launching its own probe into whether firms or individuals had helped the U.S. impose what it calls discriminatory restrictive measures. Now, this all coincides with the new port fees taking effect on American and Chinese ships entering each other's ports. China is charging U.S.-owned operated, built or flagged vessels, but not Chinese-built ships. According to state media, exemptions include empty ships entering Chinese shipyards for repair. China also pledging to fight to the end with the U.S. as their broader trade war ramps up. This follows President Donald Trump's recent threat to impose an additional 100% tariff on Chinese goods. Washington's move was in response to Beijing's announcement of sweeping new export controls in the strategic field of rare earths, which it dominates. Right, now let's get to all that market reaction to China ramping up tension with the U.S. and South Korea over shipping. And Roland is standing by to tell us more about the likely impact of these moves. Roland?
Right, Othello, thanks. Yes, it certainly marks a significant escalation in the ongoing shipping dispute between the top two economic superpowers. Now, as Trump's port fees comes into effect, Chinese shipping companies are expected to take a hit to their bottom lines as they contend with a trade war and lower shipping rates. Analysts at HSBC and Citigroup say shipping majors COSCO could face an additional $2 billion in fees next year, and Orient Overseas International would need to fork out as much as $654 million. Now, analysts do not see higher port fees impacting freight rates, which are still below last year's highs. Volume growth is slowing given the front-loading since last year to evade higher U.S. tariffs. Chinese carriers also say they remain committed to plying U.S. routes despite shipments to the U.S. plunging more than a quarter last month. Now, for more on this, we are joined by Associate Professor Goh Pui Guan, who is from the NUS Department of Analytics and Operations. Professor Goh speaking to us from Singapore. Professor Goh, good to have you on the show. So when you look at these new port fees and tariffs, what kind of short to medium-term fallout are you looking at in terms of bilateral trade?
Well, I think in the short term, what you see is that the shipping lines will have to reassign their ships from the US, the Chinese flag vessels or the Chinese-made vessels away from the US routes where possible. Of course, this is not always possible because there are so many Chinese-made ships in a sense. So some of the capacity will be reallocated definitely, and because of that, then this would have some sort of disruptive impact in terms of the rerouting and scheduling of the ships. At the same time, I think that the companies have already started preparing as well. So they have also started to look at new sort of new sort of trading and new manufacturing customers and to other parts of the world besides the US. So there will be some diversification as a result as well that is ongoing that we can see.
So, Prof, picking up on what you said about that ripple effect that maybe already be hitting China's own container giant, Costco, for instance, thought to be one of the most affected by these port fees. How do you think, if you could elaborate more, how is Beijing going to be navigating that? I mean, are there options out there to actually cushion the blow?
Yes, sure. So if you look at, in fact, among the shipping lines, right, and just now, it was mentioned earlier by Roland as well in the earlier presentation. The shipping lines are at this point in time sort of holding their rates because the rates have actually come down. So there will be an increase in the rates. They will reroute the ships, but the impact, will remain to be seen. And of course, over time, then, as this impact comes around, then they will start to reallocate to see how to balance out between sort of the Chinese-made ships, right, to going to the US, and some of these costs may also be absorbed initially as well. Yeah.
So
and of course, I think at this point in time, the cost impact is, probably still able to be absorbed by the shipping lines.
So still able to be absorbed by the shipping lines, but we've already seen factories and suppliers shift out of Hong Kong these past years. Does the latest escalation at all disrupt the current trade routes in Asia, do you think?
Yes, possibly. So this is part of an ongoing shift, right? Where, we are talking about companies, relocating in a sense, because of, they have been preparing for that diversification, away from China towards other markets as well as other production sites. So we can think of it in the context of actually, part of this ongoing sort of trade negotiation and trade diversification that is already happening.
So, Professor,
and of course, the
like
addition of that.
I was just going to touch on what you said about.
Yeah.
Go ahead, Professor.
Okay, go ahead.
All yours. No, I was actually going to talk about how
just saying
this is.
That, of course, so I was just saying that the addition of the tariff, right, would actually, is part of that port charges is actually part of how, the US is also trying to encourage the growth of the domestic manufacturing as well within the US. So it's part of that arsenal, right, of what they're trying to put in place. And of course, it is also their, in a way, the negotiation technique that we see with sort of high numbers, right, and headline grabbing type of moves. And then after that, there will be negotiation along the way as well in terms of adjusting to the sort of industry feedback as well as what is actually happening on the ground over time.
Right, so Prof, are we essentially seeing the start of perhaps two systems in global shipping, where you have got US block and then you've got a China block, where even the seas itself are divided by geopolitics?
Yes, so we've been, so for to some extent, right, we're already seeing a bifurcation of two different technology clusters, semiconductors and also AI and and of course different regulations around the data sharing as well as sort of internet-based businesses as well. So this is part of it. Of course, this is more on the physical side. So it is not as mission critical as the other type of businesses that are seen as more strategic in terms of semiconductor or AI. But the shipbuilding may be important for the US from the point of view of maybe defense, and having the sort of shipbuilding and infrastructure type capacity, and but it is not like a high tech kind of thing, right? So in that sense, it's not so much of creating a different standard or different technology or different island of capability, but more so of having control over the supply chain. Because, for example, what we saw during COVID disruption, for example, was that with the with shipping, being disrupted, is companies started to want to control their own infrastructure as well as having their own ships, right? So we saw, for example, Walmart chartering their own ships, and in order to be able to move the products on time to the US. So in a way, having control over the shipping capacity and the infrastructure is part of what we can think of as a move to become more self-sufficient in the same way that these two countries are trying to create their own self-sufficiency in what they think of as critical industries.
Professor Goh, very quickly, what do you make of the trade tiff between the US and China currently? I mean, you study trade dynamics and operations risk. What are the early signs in terms of investors in Asia that they should be looking out for? I mean, we've seen commodities like silver and gold now surging to record highs.
Sure. So for now, there are two different trends, right? On one hand, you have a sort of reduction in demand and lower oil prices that are also and lower demand that is reducing the shipping rates. At the same time, you have trends like this, right? Where you have to adapt to all these changing dynamics, which potentially will cause the shipping rates to go up, and of course pay for higher port fees as well, and plan in a way that's not just optimizing based on cost, but also plan based on sort of the geopolitical type scenarios. So these are kind of two counter trends.
But thank you for those insights. That was Professor Goh Pui Guan from the NUS Department of Analytics and Operations. And I'll be back with more business news in the next segment. But for now, Latelli, back to you.
We're looking forward to our chat later. Thanks so very much, Roland. Now, in other news, Washington says that it stands by Manila after Chinese and Philippine vessels clashed in the disputed South China Sea. The Philippines accused China of deploying water cannon and ramming a Filipino vessel at the Spratly Islands last Sunday. Well, the U.S. State Department emphasized that the country's mutual defense treaty with the Philippines. A spokesperson said the U.S. stood with its ally as they confront China's dangerous actions, which they say undermines regional stability. China and the Philippines have traded accusations over the confrontation near a coral reef within the Spratly Islands. The two nations have clashed with each other repeatedly in recent years in a disputed region. China's foreign ministry, in its earlier response, labeled Manila's actions in the area as provocations.
事实再次证明，菲方在海上蓄意侵权挑衅，是导致局势紧张的根源。中方敦促菲方立即停止侵权挑衅和煽宣炒作，不要挑战中方维护自身领土主权和海域权益的坚定决心。
Well, coming up in East Asia tonight, more business news. Samsung Electronics projecting its biggest quarterly profit in over 3 years. Plus, we delve into what's driving a blistering rally in silver that has already outpaced that of gold. Hello again. As promised, we've got Roland Lim back again in the studio joining us for business news. And just now we're having such an engaging conversation talking about the shipping tensions that was ramped up between China and the US. Well, tell us more about the markets and how have they reacted?
Well, not surprisingly, shipping stocks were most affected. Korean shipmakers were sold down, while Chinese shippers, well, that rallied in response. Chinese Hong Kong stocks tumbled as renewed US-China trade tensions spooked investors. The Shanghai Composite Index closed down 0.62%, Shenzhen Component ending the day 2.5% in the red, led by tech stocks. And in Hong Kong, the Hang Seng Index dropped 1.7%. Steeper losses in Tokyo, where political turmoil added to investors' concerns. The Nikkei 225 closing down 2.6% nearly, and South Korean shares also erased early against the end lower as heightened tensions between the US and China weighed on shipbuilding stocks. South Korean shipbuilder Hanwha Ocean closed down about 6% after China added 5 of its US subsidiaries to a sanction list. Also checking in on Shanghai listed shares of Chinese chipmaker Wingtech. Well, they plunged 10%, hitting the daily trading limit for a second straight session after the Dutch government took control of its Netherlands-based subsidiary Nexperia. LG Electronics India surged in a blockbuster trading debut, notching a valuation of more than $13 billion, eclipsing its South Korean parent's market capitalization. LG Electronics currently trading at 1,684 rupees. It's up nearly 50% from its issue price. LG's listings was India's most sought-after IPO since 2008, drawing bids worth $50 billion. The interest underscores investor confidence in consumer demand and manufacturing growth prospects in the world's fourth biggest economy. This is the second major South Korean company that has tapped Indian markets in a year after Hyundai Motors listing in October of 2024. Rebecca Bundan filed this report for CNA from Mumbai.
There's been a lot of anticipation around LG Electronics' market debut after its IPO was 54 times oversubscribed last week. It sold out in a matter of hours, which analysts say is very rare for a $1 billion plus listing. Now, LG Electronics has identified India as a key market. Its parent company has said that it's part of its Global South strategy, where it really wants to focus on accelerating growth, although India is already its third largest market. But there's enormous potential for further expansion here, it says, in terms of manufacturing, selling more premium products in the market, and also exporting to other countries. There are other factors as well that are playing a role in this enthusiasm around the stock, and that means it's listed at a 50% premium on its issue price. There's also the fact that India's economy is growing fairly rapidly, and there's a lot of scope, analysts say, for consumer electronics, appliance companies to actually grow even further in this market. Another issue is the fact that India recently cut its goods and services tax on a number of products, including TVs, home appliances like air conditioning units, to the benefit of companies like LG. So that's also something that's another positive for the company and helping to fuel this enthusiasm around its trading debut. For CNA, I'm Rebecca Bundan in Mumbai.
Samsung Electronics is set to post its biggest quarterly profit in more than 3 years thanks to booming AI chip demand. According to advanced estimates, it beat both top and bottom lines in a strong bounce back from a disappointing second quarter. Samsung has made progress with its latest high bandwidth memory chips, securing an order from AMD and waiting final approval from NVIDIA. The stock closed down nearly 2% today, but it has surged more than 70% this year. Investors are betting that Samsung can catch up with smaller rival SK Hynix, which has been taking the lead in the AI space. And SK Hynix shares are also down 0.84%. Now, this month, both chip giants struck agreements to supply chips to OpenAI's Stargate project. That, together with rising memory chip prices, has prompted investors to lift their price targets for the companies.
Big moves for precious metals this week. Silver ripping to fresh all-time highs, topping $52 per ounce, while gold, if you recall, blew past $4,000. Well, Roland joins us now to explain what's different between the two rallies. So first up, what's actually lit the fuse for silver?
Two big drivers, macro fears and possible rate cuts. I mean, the latest escalation in U.S.-China trade tensions has made investors flow towards safe haven commodities like gold, and silver, of course, is a direct beneficiary of that. And on top of which, markets are pricing a Fed rate cut, which means that real yields will go down. That also supports prices for silver. So both those double whammies pushing silver prices ahead, gold even further.
Yep. So the tide lifting both boats, but silver is outpacing gold. What's that all about?
Well, there's two factors for this. First is that there is industrial demand for silver. I mean, people buy gold to keep it under the bed, but silver, well, that's used in solar panels. It's also used in quantum computing as well as AI servers. And on top of which, there is that buildup because of AI for data centers. They need more power. So where do they get that from? Well, some of it's from solar panels. So again, demand for silver because of solar panels. And the second is that traders in London recently are predicting a short squeeze or tight supply of silver. And so they're shorting the price of silver. And because of that, because the market for silver is so much smaller than gold, that has meant a dramatic price increase in silver. Year to date, we are talking about silver roughly up 70% as compared to gold, which is up about 50%. So spot gold crossed that $4,100 level, but gold, well, that's shooting above $52.
So I can see the demand for silver there, but then Goldman Sachs saying that silver is actually riskier than gold.
Yeah, so there's two things to that. This is where silver and gold actually differ in the quality of demand. I mean, as I mentioned earlier, central banks don't buy silver, they buy gold. So central banks stocking up on gold means that there is a structural backstop to the price of gold. That isn't the case for silver because the main point of silver is mostly for industrial use. And of course, with a smaller market, if silver prices go up, it goes up much faster. If it goes down, it goes equally just as fast. That's why Goldman Sachs is warning of heightened volatility for silver because it has gone up so much. So the downside risks are just as great, especially if, for example, I should say, short sellers are forced to liquidate their contracts and buy in the open market. That's going to cause silver prices to fall quite dramatically.
So what do you say to investors who basically still want to own silver?
Well, I think that as Goldman Sachs says, that silver can outrun gold in terms of a rally. That's because it's a high beta commodity or metal. But I think the risks are there. So it's much higher than, say, gold because there is that central bank support or floor level in terms of pricing. So
when we talk about near term, what are just some of the things that investors should be looking out for in a silver cool-off? Well,
as I alluded to earlier, calmer geopolitics means that there'll be less demand for gold and also silver by default. If the Fed becomes less dovish, that means that because of economic factors or data that they're seeing, that they might not cut interest rates as fast. Well, that means that real yields will go back up, rather, I should say. And that also means less support for the precious metals. And for silver specifically, any signs of solar panel demand going awry? I mean, today we heard news that China might be curbing the manufacturing glut of solar panels. So if this is done right and the move is meaningful, you can expect slower solar panel production, i.e. less silver use. So the near-term negative impact will be on silver. But longer, medium term, though, if the central government gets it right and that solar panel prices actually stabilizes, well, that's going to be a neutral impact on silver prices.
Okay, got it. Thanks so much for explaining to us the difference between the two rallies. Roland Lim there from our business desk. We're going to go for another break now, but coming up on East Asia tonight, CNA speaks with co-founder of Cerebras Systems to talk about tech rivalry between Beijing and Washington. This is East Asia tonight, and here are the headlines we're following. The U.S. says it backs Manila after Chinese and Philippine ships clashed over the weekend in the South China Sea, reiterating to Beijing its defense pact with the Philippines still stands. The U.S. and China charge additional port fees on each other's vessels, marking a new front in trade tensions. Beijing imposing the duties following President Trump's threat to impose an extra 100% tariff on Chinese goods, which came after China intensified controls on rare earths. And shares of South Korean shipping giant Hanwha Ocean tank after China slaps 5 of its American subsidiaries with sanctions. Beijing alleging that the company supported a U.S. government probe that endangered the country's sovereignty and interests. This year has been dominated by the trade war between U.S. and China and the sweeping global impact. Just one day after taking office, Donald Trump threatened a 10% punitive duty on Chinese imports. Now, back then, his main concern had been fentanyl flowing from China. Well, the starting gun in this trade war was fired on the 1st of February when the U.S. imposed 10% tariffs on goods from China. Beijing would then retaliate with its own measures on the 4th of the same month. In April came the famous shot of Donald Trump showing off his sweeping Liberation Day tariffs. Now, he imposed levies of 34% on all Chinese goods, and this went up to 84% and then 125%, all in April. Well, Beijing matched those numbers, imposing 125% tariffs on American goods. Now, in May, we got the first glimmer of some sort of truce. After 2 days of talks, U.S. and China agreed to a 90-day pause on tariffs. And then in June, the U.S. and China were able to resolve issues around rare earth minerals and magnets. And the sides agreed in July to seek an extension to their trade truce. In August, the U.S. and China were able to extend their tariff truce for another 90 days. And as we entered this month, the trade war was back on the radar. On the 10th of October, Donald Trump ended the uneasy truce with additional levies of 100% on China's U.S.-bound exports, along with new export controls on any and all critical software by November 1st. Now, the trade war between U.S. and China also extends into the computing sphere. AI supercomputer maker Cerebras warns that the U.S. AI infrastructure rollout could slow due to a patchwork regulatory system, while it could put America at a disadvantage with China in the AI race. Roland Lim caught up with Andrew Feldman, CEO and co-founder of Cerebras Systems, to talk about tech rivalry between the U.S. and China. And he's at the world's biggest startup and investor connector event, Expand North Star, organized by Jitex Global in Dubai.
Well, I think the AI race has several parts. It has a power component, it has a silicon component, and it has a software component. I think the investment in power and power infrastructure over the last decade has favored China. I think they've been able to build out an extraordinary power infrastructure. I think on the chip side, I think the U.S. is far ahead. I think the leaders there at NVIDIA and AMD and Cerebras are a fair bit ahead of the competitors. I think the software side is probably much closer. I think the leading labs of OpenAI and Anthropic in the US are probably the best in the world. But I think China has some of the leading open source models built by Alibaba at Qwen and by the DeepSeek team. So I think there's lots of dimensions to this battle. And I think some mitigate towards the Chinese, particularly the power. But the hardware definitely is in favor of the U.S.
Andrew, for the uninitiated out there, Cerebras makes wafer-scale AI chips unlike NVIDIA's multi-GPU clusters. Now, China has just intensified customs checks on NVIDIA chips. Does this represent an opportunity for non-GPU architectures like yourselves?
Well, I think the opportunity for architectures like ours is that we are 20 times faster. And I think right now the AI landscape is in desperate need of faster results. And so that's the opportunity. I think we face the same export limitations as the fastest NVIDIA chips. And so it doesn't open up new markets for us in China. We don't sell in China. But I think the broader question that you asked is exactly right, is that right now AI is so large and moving so quickly, and there's so many applications, and many of them need speed. And we are ordered 20 times faster than the fastest NVIDIA chip, and so we're seeing extraordinary demand.
And your flagship product, the WSE3, now that's a 5 nanometer thin chip. How are you de-risking your Asia supply chains, for example, its foundries or its packaging or logistics?
Sure. So this is our chip. This is the WSE3. This is the largest chip ever built in the history of the computer industry. It's 56 times larger than the next leading competitor. And we were able to build that in partnership with TSMC in Taiwan. And we've had a long-standing partnership with TSMC. We do have components that we've spec'd and designed that are built in Samsung in their Texas factories. But our flagship product, the Wafer Scale Engine 3, does come from TSMC and is part of a decades-long relationship we've had with that extraordinary company. We do packaging ourselves in the U.S., and we do manufacture and assembly in the U.S. So what we get from TSMC is a wafer. It's transformed, packaged, and assembled into a full server, into the full computer in the U.S. Final testing is also done in the U.S., and we ship from the U.S.
Where then is your fastest revenue ramp in Asia right now? I mean, what share of Cerebras's global revenue comes from the Middle East and Asia?
Oh, I think the Middle East and Asia will be order 80% right now. So we are doing a huge amount in the Middle East and Asia.
Okay. And if U.S. policy is easing for Gulf partners, does the UAE or even Singapore make for natural sovereign inference hubs for your Asian clients?
It absolutely does. I think, the UAE has been an extraordinary partner to the U.S. I think, as has Singapore, I think it makes a great deal of sense to be sure that our partners are using the full U.S. technology stack, and that we should thoughtfully relax regulation there and allow American companies to build and deploy big AI clusters in those friendly nations.
Okay. And has there been interest from the Singapore side?
There's, Singapore has an extraordinary hardware infrastructure. They've got leading government institutes and supercompute. They've been at the cutting edge for many years. I think there's a great deal of interest. And I think as you know, the UAE and some of the other Gulf Coast nations have made AI a national priority, with ministers of AI, with AI national champions, and with sort of exceptional commitment at the government level. And we're seeing some of that now in Asia as well.
Where in Asia, including China, would you realistically deploy AI centers next?
Oh, we've deployed equipment in Japan. We have customers in China, in Korea. Excuse me. We have projects in Singapore. I think we would very much like to build out data centers in Malaysia and Indonesia. I think Southeast Asia is an extraordinarily vibrant opportunity for AI.
Well, in other news, South Korea is sending a joint response team to Cambodia to tackle crime and scam operations that are targeting its nationals. President Lee Jae-myung is asking the government to mobilize all available resources to help kidnapped South Koreans come home, saying the abductions are causing significant harm. Well, the stepped-up efforts following the recent death of a 22-year-old South Korean student in Cambodia. Reports say he was kidnapped and tortured by a local crime ring before he died of cardiac arrest. Foreign Ministry data shows 330 South Koreans were abducted or missing in Cambodia between January and August. Many of them tricked by scam job offers promising high pay. 80 of them are still unaccounted for, according to local media reports. The presidential office says the response team will leave on Wednesday, headed by the second vice foreign minister. It's also considering raising the travel alert for Cambodia. The U.S. President Donald Trump setting his sights on lasting peace in the Middle East after signing a Gaza ceasefire deal with the leaders of Qatar, Egypt and Turkey. Well, the landmark declaration comes after Hamas released all living Israeli hostages and Israel started freeing hundreds of Palestinian prisoners. More than 20 world leaders, including some from Europe and the Middle East, as well as Indonesian President Prabowo Subianto, attended the summit in the Egyptian resort of Sharm el-Sheikh. Mr. Trump urged the leaders to declare that the future will, quote, not be ruled by the fights of generations past. Both Israel and Hamas were absent from the gathering. Monday's release saw Israel freeing nearly 2,000 Palestinian prisoners held in its jails. Many of them were serving life sentences. Although not all were able to return home, including at least 154 Palestinian detainees deported to Egypt. All 20 living captives have been reunited with their families in Israel. Hamas says it's still trying to recover bodies of 24 hostages, some of whom are buried in unknown locations. Blake Sifton covered the story for CNA from Tel Aviv with more on the situation on the ground.
The ceasefire in Gaza is continuing to hold and is expected to, at least for the interim. Palestinians in Gaza are beginning to clear rubble from newly accessible areas where Israeli forces have withdrawn to and essentially are taking stock of their situation. Now, here in Israel, while there was a massive amount of relief yesterday at the release of the living hostages, there was also a great deal of shock and dismay that only 4 of the 28 deceased hostages' bodies were returned. Now, we had understood that it would take time to retrieve and recover all of the bodies, but nobody expected that that few would be returned. We've heard from the family members of some of these hostages. The mother of one man whose body is in Gaza says that her family has been betrayed by the Netanyahu government, in her words, for essentially making an agreement with Hamas. Now, another key issue in this deal is the flow of aid into Gaza. Some 600 trucks of aid are meant to enter Gaza every day to meet the needs of the people there. That's the number that the United Nations and others say are needed. Now, so far, we haven't seen such a great flow of aid into Gaza. We do expect more crossings into Gaza to open, but the United Nations says that those crossings need to be operated efficiently, and truck drivers who've waited along the border to get into Gaza have complained of very, very long waits to get permissions to enter from Israeli authorities. In order to achieve this lasting peace, there are many serious obstacles that need to be overcome. Chief among them, of course, for there to be peace is for Hamas to be disarmed and Gaza to be demilitarized. Now, Hamas have shown no willingness to disarm at this stage. And we heard recently from the Israeli defense minister when it comes to that demilitarization. He said a big component of that is destroying Hamas's tunnel network. And he said that Israel will continue to do that in the 53% of Gaza that it controls.
And you can head over to our website, cna.asia, or our mobile app for more coverage and analysis on the Gaza war, including this commentary exploring what could possibly come after the first phase of a ceasefire and exchange of hostages and prisoners. Coming up on East Asia tonight, London commuters may find the tube a little more packed tomorrow as Japanese sumo wrestlers come to town. And can Japanese vineyards rise to the challenge to diversify amid changing climate patterns? In Taiwan, a young man who loves birds of prey has found a way to finance his expensive hobby. Well, CNA's Money Mine asked him how he did it.
When you have $1 million hobby to sustain, you need a side hustle that can really take wings. But one young Taiwanese found out that a profitable sideline can also hit unexpected turbulence. Huang Kai-chun's big birds come with matching price tags. This is his current lineup. They cost over $6,500. That's just the price to buy the birds of prey.
那当然，添购一只老鹰，当然它周边都要添加，包含手套、它脚上的绳子，包含架子，还有外出的运输笼、脚绊、脚绳，还有7架的绳子。这样一组的绳子下来，大概就是5000块的新台币了。那还有它现在所站的架子，你看到这个全白铁的一座架子，约莫就要2万块新台币。那包含它放飞的 GPS 啊、外出笼这一些，加起来真的差不多就要10万块左右了。 最贵的设备不外乎就是 GPS 这个东西。GPS 这个东西现在新台币约莫在6万块，总花费这样初算下来，应该近200万是有的。那最贵的那一只是在南洋动植物王国那边看到一只白色苍鹰，那时候购买它的金额就在台币50万。对，它这个是我花最多的一次，因为这毕竟是兴趣之一啦。那 喜欢的东西，它钱没有不见，它只是变成自己喜欢的东西这样。
3 years ago, this passion project started to pay for itself. Kai-chun and his birds of prey became one of the attractions at a local ecological park.
让大家举手看一下。那这边的生态教育呢会比较简单，因为它这边的生态教育大概只有20分钟到半小时左右。 所以会简单的做一些小互动，让游客可以进去的观赏之外，还可以跟他们有一些喂食啊、拍照啊、上手，然后以及怎么跟老鹰正确互动的观念等等。
我本来就很喜欢老鹰，因为这次体验，所以让我感觉老鹰是一个很棒的生物。老鹰站在我们手上，感觉很好，很好玩，可是也有一点可怕。
世界上最聪明的鸟类是谁？举手。 曾经生态教育最高了，3天6场，大概有10万块新台币。我这边最高1年应该150万，应该是有。
But although the sideline is lucrative, Kai-chun doesn't want to take it further. One reason is that the income is unstable. Another reason, he already has a full-time day job, one that shows he's an expert with birds at all ends of the spectrum.
我在家里的工作是厨师，就是大概烤鸭1条龙我都会。
These birds are budget friendly. Around $25 for a full roast duck set with all the trimmings. It's been a family business for almost 2 decades, and Kai-chun's father hopes this will continue.
And you can watch the rest of the Money Mind episode and more on the CNA Insider YouTube page or on CNA.Asia or MeWatch. It looks like climate change has pushed winemakers in the world's traditional growing areas to reinvent as they fight to deliver product consistency amid extreme temperatures and rainfall. Well, one Japanese region that had been benefiting from the gradual warming says that it's now getting too wet to grow good Pinot Noir.
Nicknamed the heartbreak grape, this delicate thin-skinned varietal has successfully adapted away from traditional Burgundy to its new home in a small northern Hokkaido town. Because for some 30 years, warmer weather in Yoichi has allowed production of expressive Pinot Noir, with several vineyards here winning accolades. 5 years ago, a 2017 vintage from Takahiko Winery made it on the wine list of a globally acclaimed restaurant in Copenhagen, allowing that vintage to enjoy a price jump of about 17 times in the secondary market. But now, rain is threatening this hard-earned success, as Yuichi Hirotsu from Grand Polaire Winery explains.
収穫期間手前から大雨降っちゃったらブドウ割れちゃうんで病気もつけやすくなりますし、温高になればなるほど違う病気、ベト病も増えてきますし、いろんな病気にもなりますし、虫もつけやすくなると思うんで。
Mr. Hirotsu says other cold-resistant varietals he grows, originally from Austria and Germany, were also hit by a particularly heavy downpour last month.
基本的にドイツ系統の品種って寒い ところで生育する品種なんで、まあ育たないわけではないですけど、やっぱり酸抜けが早かったりするんで、ちょっと難しくなってきてるのかなっていうのは個人的には思いますね。
And now he needs twice as much time compared to previous years to remove damaged grapes from the harvest. He is afraid rising temperatures would soon make his vineyard unsuitable for finicky Pinot Noir, and that may mean switching to grow different French varieties and even hardier Italian ones in the future. Climates of wine-growing regions are classified under the 5-category Winkler Index, which originally placed Hokkaido Prefecture in Region 1, the coolest. But since 2023, it's been bumped up to Region 2, throwing off the growers.
もう本当にジェットコースターですよね。いやアルザスになったとまた今度ブルゴーニュとなったと思ったら、まあ今年は下手したら本当にロワールとかボルドーぐらいな、温度帯に近づくような本当にジェットコースターのように今温度が、特に北海道は激しいような気がしますよね。まあそんなような形で変化している。まあそういう中でまあ僕たちも栽培品種含めて、まあクローン含めて、まあ畑でのまあ栽培方法も含めて、まあ何かしらね意識し変えていかなきゃいけない。
Other efforts to stay resilient include the formation of a wine accord with Gevrey-Chambertin commune in Burgundy. This would allow French and Yoichi winemakers to exchange know-how on production methods. And to moderate temperature and humidity, Takahiko Winery has built an underground cellar for 100 barrels, a multi-pronged approach to keep Pinot Noir alive in Japanese soil.
Japanese sumo wrestlers will be throwing their weight behind a 5-day sumo exhibition tour set to begin tomorrow in London. Top rankers such as Yokozuna's Hoshiryu and Onosato arrived in Britain over the weekend as part of a 120-strong contingent and were warmly welcomed at the Heathrow airport. Now, in the lead-up, experts dedicated to the crafting of the perfect raised platform sumo wrestlers fight in were already hard at work at the Royal Albert Hall, a venue that frequently hosts music concerts. Well, the doyo, as it is known, is made of clay. And when complete, it will be about 7 meters wide and some 60 centimeters tall. Everything has to be crafted from scratch, including the semi-buried rice straw bales, which forms the ring. And as with all wrestling events, front row seats will be put one that's closest to the action. And maybe it can get a little too close. Spectators have been warned that the wrestlers could fall into the ringside area as part of the competition and possibly even squash an unsuspecting sumo fan or two. Well, it's the first time in 20 years the Japan Sumo Association is holding its first overseas exhibition tour, with the last such event taking place in London. And that was more than 30 years ago. And I hope you've enjoyed Tuesday's edition of East Asia Tonight. Don't forget your headlines anytime at cna.asia. And you can always look us up on Facebook and YouTube. Thanks for watching.